Surprisingly, actually, what it seems to have done is it seems to orange-pilled all those people. So, you have politicians who are clearly up to here in terms of personal Bitcoin allocation who actually get it. Now, it seems like we have a president who actually gets it too, right? And part of that was situational, that he got politically debanked. And it clicked, right? And Eric Trump had specifically said that, the getting debanked made it real for them, right? And I think also newcomers don't really have a view of the market cycle timing, because I know it's, there are not that many samples, and the last cycle had an extra all-time high right at the end of the cycle, which is unusual.
Adam Back is seeing a fascinating and fundamental shift in the cryptocurrency landscape, one that goes far beyond typical market cycles. There's a powerful orange pilling effect at play, where real-world events are cementing Bitcoin's value proposition for the long term. We've witnessed influential figures and even political leaders develop a genuine understanding of Bitcoin, not through speculation, but through direct experience with the fragility of the traditional financial system, a phenomenon known as political debanking. This isn't just about price, it's a cognitive shift. Compounding this is the game-changing introduction of spot ETFs, a development forced by the courts that has now unlocked a wave of adoption from established financial institutions. This has created a unique environment where, despite the price hovering near previous highs, the sheer scale of positive news and institutional inflow from giants like BlackRock suggests the market is still in its very early stages, fundamentally underappreciating the current setup.
Surprisingly, actually, what it seems to have done is it seems to orange-pilled all those people. So, you have politicians who are clearly up to here in terms of personal Bitcoin allocation who actually get it. Now, it seems like we have a president who actually gets it too, right? And part of that was situational, that he got politically debanked. And it clicked, right? And Eric Trump had specifically said that, the getting debanked made it real for them, right? Bitcoin has a fat tail to the right, which say it has like high volatility, but it's biased to the upside and
asymmetric.
Yeah. Whereas, the US stock index is more normal distribution. They got down and up. I mean, there are downsides too, but the upsides are bigger, basically. So that's an interesting data point. That, they call it redistribution, right? That, previous generation people sell. Ultimately, it's the story of Bitcoin's market behavior is, the dips exist to transfer Bitcoin from weak hands to stronger hands. So it's kind of evolution, like biological evolution. The people who for some reason are stubborn or persistent or value investors end up the winners holding the Bitcoin. Bitcoin's distribution helps. And like I say, if people care about decentralization, buy some Bitcoins, cold store it. Or take it out of the ETF. Now you can fix it. So in Bitcoin, you can't really sort of complain to somebody. You could do it yourself, right? So if you care about something, buy in cold store. And of course, as you said, the people, the cohort that are selling Bitcoin from a couple of years ago, they're doing the opposite, right? Which is they're selling the coins to the sovereign wealth funds and to the treasury companies and the ETFs and the BlackRock. So, as well as the ETF, BlackRock did something else interesting, which is they recently made a position paper suggesting a 2% allocation for diversified funds, which is a helpful reference point for people like Sean, who are making a similar recommendation in 2019. But now they can say, well, BlackRock also is saying something similar, right? So people will, in the finance world, will feel that BlackRock saying it kind of covers them, as if that goes wrong, or people will feel comfort that there's multiple people recommending it.
The critical question in this market is, who is selling? On-chain data, which analyzes the age of coins being moved, suggests that a significant portion of the selling pressure is coming from individuals who bought during the previous cycle's peak. These holders, having weathered a volatile dip, are now selling as they break even. However, this supply is being met with voracious and unprecedented demand from much stronger long-term hands. Entities like MicroStrategy and BlackRock are absorbing multiples of the daily mined supply of Bitcoin, not to mention the quiet accumulation by sovereign wealth funds. This represents a historic transfer of Bitcoin from weaker, more reactive holders to a new class of strategic, long-term investors. This new cohort consists of professionals and business people who are reallocating portions of their portfolios for the long haul. They are the type of investors who see dips as buying opportunities, creating a more stable foundation and a higher money multiplier for capital flowing into the ecosystem.
I think we got a kind of growth spurt in terms of metrics since the last, well, I guess the spot ETFs was a big one, but that was by the courts. So it wasn't like the SEC approved it willingly. But now with the current administration, they're more open for business. And so I think we kind of got a lot of metrics caught up with where they would have been without that friction over the last few years. So, the regulatory environment for the traditional custodians of shares are now cleared to custody Bitcoin. They got some work to do, but they're able to do it. And more of a wave of financial institutions offering Bitcoin-related products. Because those things take a while to land, because they will say they're going to do it, but then they're going to spend months figuring out the guidelines for their advisors and what allocations they can advise and things like that. So probably in market terms, it's going to land in the the next 6 months or something in some of them. And confusingly, the price is only 110,000. It feels cheap with the context, right? Because, we got to 73,000 before the halving, 73.5. It's not that much higher. And the amount of positive news, announcements from financial institutions or from wealth funds, the ETF inflows, all of these things are enormous. And, between MicroStrategy alone, that's 2 times the mined Bitcoin per day since the halving, and BlackRock, IBIT, another 2 times. There are traders on Bitfinex at times absorbing 1 or 2 times more, depending on market conditions. So it's buying if it falls back, and somehow the prices, question is who is selling? I mean, like, why would you? And what's going in their head? Why would they sell at this time? It seems like a really strange time to be selling Bitcoin, given that we're, to my mind, still in the relatively early days of a bull market with all of the metrics, running really hard. So one of the on-chain metrics where people try to guess based on which age UTXOs they see moving, it's an indicator. It's noisy, but it looks like some people have been holding Bitcoin for a year and a half, 2 years. So maybe they bought in the previous bull market around the 60,000 mark. Perhaps they didn't enjoy watching it dip to 15 and a half.
Yeah.
And so they're like, okay, they're selling eventually. And so maybe that's going on. But, whoever is selling, there's a lot of buying. They have to run out of coins to sell sooner or later.
Yeah.
So I think that's when it gets interesting again. I mean, we're saying it's not very high, but I mean, we just had an all-time high in the last week a few times, right? So it's on the move again.
Yeah.
Still, another indication of institutional interest levels is somebody went through the BlackRock IBIT filings, and they could see of the people that are obliged to disclose, about 33% was institutional ownership. But nevertheless, that's a nice number. And I would say the other ETF holders, where an ETF was a simpler interface, is sort of accessibility, right?
Yeah.
So for the crowd that, when they want to make an investment, they call their financial advisor, they call their broker, and they couldn't do it before. Or then the futures ETFs are not attractive products, right? So I would say that is the sort of top 10% of wealth in the US minus the top 1%. So not the super high net worth, but just professionals, the doctors, dentists, business people with a portfolio that they're taking an interest in.
Yeah.
Maybe have somebody else manage, but have some input into it. And it's not, it's not new money. They're just reallocating something in a portfolio. So I think the fact that they are they're reallocating in a portfolio, and they're longer term investors, it turns out. We didn't know what to expect, but they're also quite long term investors. So they it's a good type of investor to have because they're not going to panic sell when it drops 5%.
Right.
If anything, they might buy some more.
Right.
You saw that in some of the metrics. So that's interesting to see evolve. It means the money multiplier, like how much capital needs to come into Bitcoin to push it into the next layer, is less. So, you get higher multiple on the market cap versus the money in if you have these kind of investors.
Looking ahead, the evidence points toward the early phases of a sustained bull market, driven by a complete transformation in who is buying Bitcoin and why. The current price action, while impressive, feels modest when contextualized by the enormous structural changes underway. The floodgates of mainstream finance have been opened, and it takes time for these large institutions to fully integrate Bitcoin into their advisory frameworks and product offerings. As this wave of acclimated financial products becomes widely available over the next year, the buying pressure is set to continue. This isn't just speculative retail interest. It is the calculated reallocation of existing wealth by long-term institutional-grade investors. The evolution we are witnessing from early adopters to institutional titans is a biological-like process where the most resilient and strategic holders are accumulating the asset. Sooner or later, the sellers will run out of coins, and that is when the true impact of this great redistribution will become apparent.